What's up, everybody? Wall Street Jesus, Tuesday post-game show. I should have asked you before I even hit record, but can you guys see the screen and hear the voice okay? Cool, thank you. All right. Felt like I haven't done one of these Tuesday webinars in a while. Lucci was on here for a couple of weeks. Then I kind of lost my voice there last week. It's good to be back on here. We're open to both members and on social media. So I don't get the chance to talk to you guys as much who aren't members. So good to see some of you guys back in here. And we'll talk quickly about the markets, and then we'll just open it up to whatever questions you may have, maybe concerning the environment, the climate, trading strategy in this particular climate, because flow is, sweeper activity in general has been awful. All right. And as a lot of you know, members hear me complain about it constantly. They've been complaining themselves. But those of you on Twitter, you remember on these Tuesday webinars, we've been complaining about the overall activity, the quality out there. Basically, the flow lacking quality for a while now. This goes back into the summer, if you remember. Now, it's easy to say what I'm about to say after having this type of market environment in front of us, that's probably why these guys weren't ready to put much confidence behind some of these orders. Not only, I don't want to make it sound like it's voodoo that they were anticipating this, but, in hindsight, ourselves, we can go back and you look at the market and you look at the rally and you look at, earnings in general, and eventually you're going to reach a point in time where things top out. You know what I mean? I remember when I actually used to look at fundamentals once upon a time. You get these hot growth companies, they grow at 400%, and the next couple of years, 100%. Then they get too big and they start growing at 50% and then 20%. And then it's tough to get excited about them anymore. And that's kind of what happens in a market and a rally that gets long in the tooth. All right. You hear late cycle, right? Peak earnings. And that's what they mean by that. Okay. And then you get into this type of environment we're in now, where a lot of the stuff that we've been ignoring, if you remember, like in 2017, trade wars, Trump drama, politics, this market brushed it off its sleeve and just, ripped another 30 handles. And now every little thing seems to bother the market, right? Earnings aren't good enough. Guidance is not good enough. And don't get me wrong, there's legitimate stuff out there, right? You got the Fed, you got trade war. A lot of companies are complaining about these tariffs now, so they're starting to feel it. But it's just the market focuses more on that when you're in this type of distribution, okay? And it's totally normal. The problem is sitting through something like this. And this is what we talk about this all the time. We've been talking about this through even the rallies, if you guys remember, is trying to do something to survive and keep yourself busy and not get mangled in this type of climate. All right? Because, and listen, some of you who are newer to this game, you're going to hear people talking about how much money they're making on the short side, and then they're getting long, and then they're getting short, and they're hitting both sides. And I'm telling you this, and this is going to be the best advice I can possibly give you. You have to try to ignore that, especially if you're new to this game. Okay? It's not as easy as they're going to make it out to be. Don't get me wrong, the volatility does add some excitement to it. If you can stay disciplined, you can take advantage of some of the shorter term moves, but they're not there every day. Like people try to make it out to be. You know what I mean? The short's not there every day. It's not that easy. So the way I look at, for me, especially that I don't play the short side at all, okay, my job is to find a way to hang in there. Okay, I know I'm going to play, right? I want to focus on my intraday stuff because that's where I can minimize my risk. And that's where I'm going to do my best, in my opinion. That's for me. But as a swing trader, I really want to rein it in. And I know I'm going to take shots out there, right? I'm going to find a name, sentiment's going to be set up, I'll roll the dice in a small way. And that doesn't bother me because in my mind, the smaller positions I put on, okay, if I'm managing my bankroll properly, if I'm managing my risk properly, they will even themselves out at the least. I'll give you an example. I haven't, I can count on 3 fingers some of the action that's gotten me excited out there. All right. And, I'm still taking flyers on some swings. All right. As a matter of fact, just the other, late last week, I took a shot on some PayPal Febs that obviously I'm underwater. Okay. But the way I look at it, like, I took a, small position that I was maybe going to add to if it hung out down here and caught more action on a Beezer Holmes. And that clicked, so even if the PayPal goes down, and another one goes down, they end up even themselves out. And granted, it's not, it's not the best outlook to have all the time in the market, right? You want to be serious, you want to make money, but it keeps me entertained. It keeps me involved. Hopefully I can make a little bit of money net and hang out and wait for the bigger setup. Okay. And for a lot of you swing traders, the bigger setup is going to be at the point in time this officially comes to an end and a new bull trend comes out of this mess with new leadership, new growth names we probably aren't even aware of right now. Okay. The issue with that is no one knows how long that can take. Right? You can go back through history. I could tell you every single one of the market corrections I've been in. All right. And I still have no clue how long this one's going to be. Everyone is different. Every time is different. Right? We got a Fed here. You got quantitative tightening out there, which is a whole new can of worms that you can't factor in to some of the prior corrections. So, we can look at some of the prior corrections in year past and get an idea of how, they were shaping up before they came to an end. But in reality, we have no clue. All right. But for me, what's going to happen, all right, each and every single correction I've been in, including one Armageddon phase, okay, obviously 2008. But what happens is at the end, there's always that bearish sentiment that's at or near an extreme, okay, and the flow tells a completely different story, okay? In other words, things are still bearish. It's not like a siren goes off and says, okay, everybody, it's over, get long, just buy. It's not that easy, obviously. So what happens is you start to notice that what we were seeing here. I mean, for example, the market was at new highs towards the end of the summer, okay? And the internals, right? A lot of you follow those. The internals, the breadth of the market was awful. We were talking about that bear market tornado going from sector to sector to sector, kicking the living piss out of things. By the way, it's in oil now, and you see what's going on there. Okay, so that's not the start of a whole new bull market. So what happens is, as the damage gets worse out there and the sentiment remains bearish, we start to see the flow, we start to see the smart money build some confidence and take some real shots out there. Okay. And for us, it's tough to get behind them because it looks so bearish out there. All right. And that will be the start. And a lot of times it's a point where most of us can't even get involved. But little by little, we start to see better action, some of the action work, right? So you start to see some big bets. You start to see them become profitable trades. And then you start to see some new names that start to look good, even on the technical side of things. And it's a process. And that's how you know this is coming to an end. And you don't have to be the first one in. We all want to catch that low. It's more pride than anything else. But in reality, okay, and if you're new to this game, you don't need to be there. Okay? And if you are, you're probably going to be in the small way anyway. But it's not about that. It's about what comes after a phase like this. Okay? And again, I just want to reiterate, this looks like it's going to last forever. And it may last a long time. All right? But throughout my career, a lot of them, the majority of them, were shorter than anybody expected. All right, and 2008 was the one exception. The one exception. 2000, the NASDAQ bubble, again, you guys heard me say this, that started off a stretch in my career, the best stretch of my career, the NASDAQ bubble blowing up. So that's not in my category of Armageddon, because what happened was money rotated out of techs, and while all the riffraff were staring at the same tech names because that's all they traded for years, sound similar, right? What happened was underneath the hood, there were small cap companies that were doing well with explosive growth rates that started to take leadership and lead the market out of a correction. All right, so even though the tech names underperformed and they got beat up, the total opposite of what we were seeing a couple months ago. There was a whole other side to the market that was strong as hell. And I hate to use the word easy ever in this game, but easy money was there to be made. All right, and if you look at 2008, right, again, that's the example of as bad as it gets. Okay, that's my example as bad as it gets. And anybody who's been trading, I think I've been trading since 97. Well, I've been following the market 97, trading since 1998. Okay, anybody post the 1987 crash that I talked to will tell you 2008 was the debacle. Okay, you know how many players got made out of that 2008 Armageddon cycle? Again, we were talking about this with members. You could count on probably one hand how many blew up in a good way off the downside. Some of the guys you see on Bloomberg and CNBC right now, their names are known because what they were doing, they had money when it blew up in 2009 and started to buy. All right, so the worse it gets, the better the opportunity, but it will take time. All right, so the point of me telling you all this anyway, okay, you're probably saying, well, what the hell is he, who cares? The point is that right now, you got to try not to get too frustrated. You got to try not to beat yourself up, both in a monetary way and mentally. Okay, and you just got to find a way to hang around, to have your eyes open and ready to go when you start to become convinced that things are looking different. And that should be your goal, in my opinion. if this is the first correction you've ever been a part of, and I guarantee a lot of you out there, I talk to traders. Oh yeah, I know what I'm doing, this and that. Oh yeah, wow. Yeah. So you could trade in correction, bear markets. Yeah. I play the shorts. Well, when did you start trading? Oh yeah, 2014. 2014. You haven't even been through a correction yet. What the hell are you talking about? 2014. So if this is new, okay, if this is new to you, what I just went through is exactly what should be your goal. Size down, hang around, and make sure you have ammo to fire when it's ready. All right, so I just wanted to start the webinar off with that because we always have the tendency to dive in, and I see already, oh, what about, we saw some QQQ action in there. Maybe it's you know what I mean? So I wanted to start the webinar off with that right now, to this point, as I'm talking to you, in my opinion, I'm not convinced that the smart money has any confidence out there. Okay. And I'll give you an example. Okay. We saw today something in the QQQ December line, call side. I didn't post it. Oh, I did. Also, XLK was brought up. And, this guy started, again, guy, gal, machine, God only knows, but started hitting up the December 179s, one after the other throughout the afternoon. Market was going up, market was going down, market was dead, and we continued to see action come into this line. Impressive. And that's the epitome of the type of buying, the sort of behavior behind the buying you want to see for signs that this is close to turning over into something different. All right. The problem is that's the only thing that was being bought. Okay. Throughout the whole afternoon, there's people putting on protection. There's put sweepers in this, blocks in this. The only thing they were sweeping was an ETF in the Qs. So the way I look at it is, it could be possible this may be the start of something, right? Maybe in a couple of days it starts to spill over into the individual names. But without the individual names participating, I cannot put as much emphasis as I would if they were hitting up all the big tech names at the same time. Why? Because you heard me time and time again, right? In the bull market for years, as the market continued higher, there would be put buying in ETFs every day. Some were pretty aggressive. But in individual names, they continued to be aggressive on the call side in individual names. So when you see that, that's likely that syndicate, that fund, that player is hedging and protecting, his portfolio full of tech names if he's buying the QQQ puts. So now we're in a bearish environment, okay? And we're seeing an ETF get bought on the call side, but we're not really seeing it spill over into the individual names. That could easily be somebody short tech names protecting against a squeeze. Makes sense, right? Now, again, you could easily turn around and say what I say to a lot of people, that if he's sweeping the Qs aggressively, he's pretty worried about a squeeze. And yeah, it may translate, it may turn into a decent squeeze. Okay. But net, big picture, it's still not, what we're looking for this thing to be closer to an end. All right. And no matter how bearish the environment is, there's going to be squeezes. We see them all the time, right? We just saw one here. And that's what we got to look to take advantage of. Like, for example, this squeeze here was a monster, an absolute monster. Okay. Means nothing. We could be in the most bearish environment since 2008. And this bear market rally, which we would call it, would be totally normal. The rallies are more powerful, vicious in a bear market than they are in a bull market. It's a fact. All right, so that's why we can't get too wrapped up into, selective flow like that. When we the clues we want to see when this thing finally does come to an end, we're going to see this type of action in a bunch of things. The way they've beaten up some of the stuff out there, you're going to see every big name that makes up this queue get hit like this. You're going to see Microsoft. You're going to see Apple. You're going to see all of them get attacked like this. Okay? And likely you'll see other ETFs too, because chances are, if the queues are ready for a big move and they got a lot of confidence in it, they're probably going to find a gazillion other things out there that they're going to be confident in because things have been so washed out. All right, so this could be, what I'm saying is this could be the start. Again, we don't want to ignore it. I never want to ignore action like this, but we don't want to jump the gun. We don't want to jump the gun. Now we start seeing, tomorrow we come in and we're down and there's some weakness and they start tattooing some individual names like this, then maybe we got something cooking. Then maybe we got something cooking. All right, but the flow in names, and listen, the flow in ETFs has been abysmal. And not abysmal necessarily in a bearish way. We see call buyers, we see put buyers. Sometimes we see call and put buyers come in simultaneously. SPY calls, right behind us, SPY puts. So we can't put too much into that. All right. Now, for example, today, Facebook caught a little bit of action this morning. Didn't catch a bet the whole afternoon. Apple actually didn't even catch sweeper activity today. Caught a sweeper yesterday. Caught some block activity today. That's not how they usually play these things when they buy something like this. All right. And the top action overall today, in my opinion, as far as aggressive activity, was in LVS. All right. And maybe these things are trying to finally find a bottom. They've attempted it. Win, right? Caught some more activity yesterday. Is this Win? Oh, I thought I was looking after mine. I was ready to say was up. Wasn't even up that much, $2. But maybe these things finally bottom out. And listen, in my opinion, I think, and I could be wrong, but I think some of the names that already went into this bear market mode before tech is one of the last ones to get hit. I think these things got to bottom and see flow first. And they're not seeing flow. Very selective action out there. Extremely selective action out there. All right. And that's another problem too. Why, again, I started the webinar off with the way I did rather than getting into flow or anything else. Okay. Because let's say we do see some good looking action in, I don't know, let's say Facebook, whatever. Okay. Let's say Facebook start to see some real action come in. Well, we saw a little bit of action come in the last 2 days. Let's say tomorrow we come in, there's some more action and it starts to look real. If they're still sweeping puts in Apple, Netflix, Google, Microsoft, or whatever the hell else they're doing out there. Think about what you're asking yourself in this type of environment. Bearish almost everything else, and you want Facebook to buck higher on its own. Yeah, that's a tough feat. Can it be done? Yes. Now, is are the odds and the probability in your favor of that being done? No. And you know, a lot of this game evolves around that, right? You hear Lucci all the time say he likes to have the wind at his back to catch a move, especially if he's going to size up, right? It increases the odds of you making some money, all the help you can get. So that's another problem here that we're seeing. You know, we see selective flow maybe come into one name, but the rest of the action is a nightmare. And if you look, okay, here's a little bullish stretch into the close. You could see nothing outside of Qs and LVS, which I just mentioned. You know, nothing really sticks out. Wind block, blah blah blah. But look at what led up into it. Like look at this action. Okay, and those of you who are members know that when the market really starts to heat up, okay, whether price action is getting that hot or not, this board starts to light up all green. All green. Yeah, maybe there's a put buy here and there, but not this. Not this. You know, even when the market's up, we're seeing the tape light up in red. All right, so that's my, like, for me, for example, what I'm trying to do, these little windows, especially if I have sentiment on my side, the little windows of green, as you see there, is where I'm looking to find something to trade. And a lot of times, like I said over and over again, the flow's been pretty bad that I'm not finding too much on a day-to-day basis. Outside, I don't know about you guys who are members, but after this niner right here this morning, I couldn't find a thing. I don't know about you guys. And that was at what, 11 o'clock? Right there. Actually marked the highs of the day. The flow went dead, and we saw pretty much put sweepers dominate the tape and oil crash, by the way. All right. That's another thing. You see what's going on in crude right now? You see what's going on there? You know, we saw it in gambling, right? We saw it in that sector. We saw it in the biotechs. We saw it in housing. They're going from group to group to group, annihilating shit. Annihilating stuff. All right. So I'm here to share with you guys how I approach the flow and everything else in this environment. And the main takeaway is you may not want to hear it, and I know you probably don't, and you got probably unicorns on social media whispering sweet money-making situations in your ear all day long, no matter what the market conditions are. But this is the stuff you want to tread lightly. You want to be careful, but more importantly, you want to survive. You want to be able to come in each and every day, pay attention to the flow, pay attention to price action, pay attention to sentiment, and not get frustrated and hit over the head financially, but by what's going on right now in this climate. That's the last thing you want to do. You want things to loosen up. Yeah, and listen, like I see somebody, Rustin mentioned SGMS. They're buying, they're buying what? Leaps. They bought some Aprils, had the pop, and just like the market and everything else rolls over. There's not, you may find one needle in the haystack, but it goes back to the point I just told you about one name catching any kind of flow. There's nothing that you're missing out on. You understand? Outside of a quick trade, there's no big trend to the upside you're missing out on here. Nothing. And some people have to lose money and get frustrated to realize that. Okay? Now, there's more and more that look like this, right? At first, it was just a couple of sectors nobody was paying attention to, right? When we started talking about this. Now, you name a hot name, and she's gone south. So no matter what you buy, if you bought Roku, you bought Square, no matter what you buy, it's going to be tough right now. And then, like I said, Rustin, we're going to start to see groups outperform and the action look a little bit better. You know what I mean? And usually it starts up because it's such a big part of the market that's been decimated. It's usually some of the stuff that got beaten up first. They end up bottoming first. All right, tech. This just happened in tech. This just happened in tech. Some of the good tech, like Square. These things were at new highs as Dorsey sells 100,000 lots every single week. So we just need to be patient. All right. Before I take some of your questions, again, the action today, this is the gist of it. All of it, the majority of the action came in the morning, except for the QQQ and XLK buying. All right. I saw a couple of you guys talk about maybe earnings. Yeah, it could be earnings. I mean, I really don't know. You got NVIDIA, Cisco reporting. Could be. It was pretty aggressive. Yeah. And Abby, Microsoft, right? You know by now, Abby, when they're bullish Microsoft, what's that flow look like? Right? They're sweeping calls every 5 minutes to your jaw drops. Now, honestly, I'm seeing as much put buying as I am call buying in Microsoft, to be honest. So, why would I want to fool around and hope that one call buyer happens to be right in the middle of that whole mess? I don't want to do much of it. I'm a degenerate and I want to play, but I don't want to do too much of it. Okay. The playbook here in this type of environment, okay, as far as your best risk reward trade, is when you start getting sentiment flashing enough green signals, you start looking at the board, starting to see some call buying stem up, and that's where you want to throw a dart and look to catch one of these. That's the playbook in this environment. Okay, all the rest of it, the moves are so short and so quick, you're better off day trading. You may catch a squeeze the next day. If you don't get out, the market rolls over and is at new lows. That's the playbook until we get out of this climate. So what's that mean? That means we're likely have to chop around at the least, if not head lower. Maybe another day or so. We're not too far away. And then you start to look for some half decent flowing names that may be signaling a squeeze to help out with the timing. That's kind of what we saw down here. Some of it a little bit earlier, right, than the actual lows. But the squeeze is big enough to where at least it's rewarding. At least it's worth the reward. But, and the total opposite, again, we talk about this every Saturday on the webinar, but the total opposite you want to do in this climate, the number one commandment is not to buy this into bullish sentiment. And that's what we had, folks, if you can believe it. As bearish as it was down here, Short-term sentiment here was cooked. And a 9er. Check. So it's about staying patient. Like here again, the trick is you got to find a way to entertain yourself in the meantime. You know, if you're a swing trader, it's not an easy thing to do. You come in every day, you look at the price action. Trust me, based on emotions, your emotions and psychology, you're going to find something you're going to convince yourself that you like. No matter how many times you tell yourself, I can't buy here, I got to wait till sentiment sets up. That's the playbook. You're going on the way to find something you talk yourself into. As long as you stay small, right? As long as you stay small, you're okay. You can survive. Maybe you catch a squeeze for a day or two and make some money on that trade. The next one, you lose some money. You're not going to bury yourself. Hell, maybe you get lucky, you make some money, net. In the meantime, while waiting for the bigger setup, and taking a little more of a shot until this, again, comes to an end. And I just want to repeat, we have no idea. We have no idea. It wouldn't shock me that these are the lows right now. I don't care what any of you guys tell me what's going on in the world. It wouldn't shock me that these were the lows, and maybe we have to test them. Maybe we have to look like we're going to test them and fool some more people. But you got to keep, you just got to keep an open mind about it and just have an idea of what you're looking for ahead of time. All right. So, what else? Let's talk just quickly about some of the other stuff that caught a little bit of action. Maybe you guys could keep an eye on. Again, here's just a simple scan of trade alert sweeper activity today. Here are your sweepers. General Electric actually had some momentum today based off they were getting rid of that Baker Hughes division. Caught some call sweeper activity, then some put buying towards the end of that move, where you can't blame them. But you can see here, a lot of puts. A lot of the better looking sweeper activity has been on the put side. Retail names caught some put action today. NIO was a lot of rolling there, Rustin, from what I saw. But even that was cheap action. Cheap action. 10 cents. You know what I mean? Those are flyers. Those are lottos. Again, Rusty, you want to roll the dice, 10 cents? That's fine. If that's what you're going to do to entertain yourself. You know what I mean? You just don't want to be negged out if it doesn't pan out. But look at this action today. Oh, I want to throw up on my screen looking at it. Okay? LVS, I told you, best action of the day. GE, you could have it. AT&T puts. Here you go. Here's one for you guys. Sears Holdings. Dollar calls. Anybody in? Oh boy. KMI puts, GE puts, Venom puts. This was caught some action on the put side today. Ross Stores. Like I said, some of the retail names. KSS saw some put action. All right. There you go. That's your list. So there's nothing on there that caught my eye outside of the LVS, which I mentioned to you guys. All right. That's as far as sweepers. And blocks, there's a little more activity out there that will mislead you to thinking it's bullish, but you already know how I feel about block activity in bull markets. Can you imagine in this climate what my impression of block activity is? THC caught a big block of Decembers. Take a guess. Let's see. Who's been paying attention on all these webinars? Why did I mention THC as a big bet today? A whopping 20,000 contract block at 25. Anybody know? No, not Warren Buffett. I'm saying, why didn't I mention it as a big bull bet today? in this webinar. It was tied to stock, ladies and gents. It did cancel and replace, so you're half right, William, but it was tied to stock. It was tied to 40,000 shares of stock. So that wasn't a clean bet. IMMU puts, GE, we talked about eBay, some put action, nothing. Here's an LVS quarter block with some sweeps. There it is. Nothing. All right. So that's the action overall net today. What are you guys looking at? Let me see what you guys are looking at. Give me some names. By the way, let me show you what went on in Facebook. Because it's as good as anything else out there. Here's the Facebook. Where's the sweepers yesterday? Yeah, so this was the guy yesterday. There's a player yesterday that caught my eye. Oh, this is today. Wait. December 140s in a sweep. You can see 418 grand there. And there was another one there. December 140s. Big wood. Good looking orders. They were two good looking orders. The only issue I had with it was the rest of the activity that day. In other words, that wasn't the only line of action. You know, if it was the only line of action, we could have some confidence that somebody was placing a clean bull bet on the name or bets. You know, there were November puts, next week puts. So it wasn't clean. You know, it wasn't clean. But again, two good looking sweeps. And then this morning, yeah, so you can see my comment tag. Tough to really tell how clean the buying is. The flow was pretty messy over there. Here was the action again. This is today, this morning. The 145s, they bought some more. This was an opening sweep, not as big. 1030. And that was around the same time, 145s. So that was the best line, was right here. Today, 145s. Yesterday, the 140s. And, you know, you had some smaller action. This was November 23rd, 143. All right, so keep an eye on Facebook. You know, keep an eye on Facebook. Like I said, we would want to see maybe some of the other names, FANG names, catch action. Right, so at least we have confidence that, you know, we don't have to buck the trend in Facebook. It doesn't have to go up by itself for us to be successful on the trade. You know, I'll give you an example that there was one day, you members will remember, there was one day before this squeeze happened. They came in, they bought Netflix calls in the morning. And we said the same thing. All right. There were some good looking sweeps in Netflix. So we were like, all right, there's good looking action in Netflix. There's nothing else out there being bought. We would like to see some other, you know, other names in the group or that resemble, see some activity the same way we're talking about Facebook. Lo and behold, in the afternoon, the flow turned on the snap of a finger. CRM, Salesforce, caught some size sweepers. Square, Amazon. You guys remember it. It was like a Wednesday afternoon or Thursday afternoon out of nowhere. Okay? And that's exactly, so you know what I'm talking about, what to look for. That's exactly what I'm talking about. All right? Maybe Facebook, like the cues, maybe it was a sign of something coming, like the Netflix. All right, but we still, in order for that to be true, we still need to see other action. We still need to see other things being bought aggressively. And then we can have the confidence, all right, you know, they're finding a spot here off the pullback. They're looking for a squeeze. So that's what I would be paying attention to. If we don't see that, I would just pay attention to Facebook, especially into any weakness catching sweeper activity. Because you'll know, if this thing comes back and tests lows and we don't see any call sweeper activity, we know it was bullshit. All right? We know how they sweep these names. They're not going to let it go lower when out with a couple days later and not look to take advantage of it. So that's what I would stress. Again, have the patience. If you can't help yourself, right? You like Facebook down here, you were waiting for action. I gotta buy it. Buy a little. Buy some. As long as it's not going to destroy you and neg you out, if it ends up being a loser, buy some. If you're sitting in cash, if you did the right thing and you sold or took some risk off up here and you're looking for something to buy, that's why I bought a little PayPal the other day. It's not looking good right now, but that's why I did it. But for it to be real action that you could have confidence in, you want to see them come back. Like PayPal. I haven't seen them come back. Maybe they will, maybe they won't. It was Feb, so they have a little time if they want to see it come back. Filter Steam Room. Steam Room, yeah. Well, you can filter the actual room app. You can filter, here's the filter tab. So in other words, this is just my commentary. And then you have some of the smaller action that doesn't hit the board, you're not going to find. But you'll find the bigger action on here. You understand? Yeah, you can on Twitter, if you're a member of the room, you got access to Twitter and you do the same thing what I did. Put at SL Steam Room, the ticker, no $, and this comes up. It should. Sometimes they play games, but it's working for me. Try it like that. Bruce, USO, I mean, how do I like the April action if you're going to take a shot. Just because, one, you're going to need the time. Two, USO is it's not worth trading USO, in my opinion. It's not worth it. At least that's my opinion. Yeah, I mean, listen, USO can catch big size. Okay? The April action in USO was okay. But I've seen USO, I remember in 2016, so there was somebody or something out there that bought like 200,000 contracts. Again, it's an ETF. It's an ETF. So you got to take any of that action with a grain of salt. They're buying USO, but, they're not buying anything else. Who's to say they're not shorting something and buying USO to hedge? You never know. You understand? So that's what I mean by that. For me, it's the individual names that always tell the cleaner story. That's just the way it is. The ETFs, especially the active ones, there's too many hands. There's too much action in it. And a lot of people use the option market to hedge. A lot of players use the option market to hedge. If you're long, if you're too long oil risk, maybe buy, if you're too long short risk on oil, maybe you buy some US calls to hedge some of it off now that it's getting beat up, right? It's possible. Just like I said with the Qs. If you're shorting the daylights out of Microsoft, or any of the other big, or Apple, or any of the things that make up the Qs, right? If you've been short these things and you're concerned about a squeeze, but you don't want to cover those positions, what are you going to do? You're going to go and buy the shit out of QQQ, right? Wouldn't you? How else are you going to hedge? So, that's the problem with it. Now, if they're buying QQQ, like I said, and they're buying Microsoft calls, and they're buying Apple calls, and they're buying whatever else is in the queue aggressively, then we can say, you know what? This syndicate's got a pair of coconuts and betting on a big squeeze here. At least you can have some confidence in that. Because that's what they usually do when they're playing for a squeeze. That's what they usually do. So again, it may turn into that. Maybe it turns into that. It's certainly possible. Maybe it is a short and they're concerned about a squeeze of some of the earnings that are coming out, and they end up being right, and the hedge paid off. But it's not about being right or wrong. It's never about that. When you're looking for an edge out of the flow, you're looking to get in the middle of smart money betting, right? That's the whole point of paying attention to the flow. Anyone can get lucky. You could see a QQQ buyer 50 contracts and tail them and make money by accident. You want to pay attention to the real action. But the problem is and this is the problem, guys, when we're limited. Again, going back to the flow, it's been shitty. We try to make diamonds out of anything here. So we'll see, though. It's something to definitely keep an eye on. Jody saying, help, I'm long Amazon and Netflix. What do I do? What do you do? What do you want to do, Jody? What do you want to do is my question to you. You could do whatever you want. You're long stock? So you're saying you're long Amazon at 1950? Oh boy. 1950? So you bought the highs basically, Jody? Yeah. For what? A trade? If it's a trade, you should have gotten out and should get the hell out. If it's an investment, you should be looking into weakness, slowly cost averaging in. Nah, I don't think I'll be she's equipped for that. Oh, you were selling puts? Oh, Jesus Christ. Yeah, I mean, now it's spilled milk now, Jody, but that's why it's dangerous. You know what I mean? That's why it's dangerous. And Jody, there's no right answer. I can lie to you. I can lie to you and tell you, oh yeah, the stock's going right back to new highs. Hang in there. Yeah, I'm lying to you. I have no idea. You say you don't need the money, so you can afford to be patient, but at the same time, you don't want to watch this stuff get buried every single day and neg you out. The most good that can come out of your situation, Jody, is you learn from that experience and make sure not to repeat that mistake again. I know it's something you don't want to hear, but it's the truth. Because at this point, you're hoping to get lucky. But, again, you're saying it was put to you. Because I was going to say, if it was a trade, yeah, well, Jody, now listen, you talk to any trader who's been in this game long enough, all these lessons are expensive. Yeah, and that's what I mean. If the way you phrase that question, exactly what Dave is saying, Jody, the way you phrase that question, you're saying you don't need the money, but you seem concerned. And if you do, you should probably get the hell out if it's going to be a lot more painful if it goes south from here. Or pick a number where if she goes back down or test the lows, you're pulling the plug, and that's it. Just to give you a little faith. You know what I mean? If Amazon breaks these lows, you're going to finally capitulate and pull the trigger. That'll probably be the bottom too. Anybody else have any any good news? Any names out there that they're eyeing? Who's eyeing anything decent? Disney. Disney's been one of the few that's been solid. But just because of the market conditions, I can't get too excited about it. There's been some nice leap buying in Disney. It's almost like a flight to safety there at the same time, because she was lagging all these years. So, but I couldn't buy it up here, if that's what you're asking. I wouldn't buy it here. I wouldn't buy it up here, personally. COP. We saw some puts in COP. It wasn't anything big, but we did see some puts in COP. Some small put sweepers that were surfacing. That couple of the other ones, I think what's that? Hold on. Not PDC. What the hell is that one? PXD. Oops. That's it. There was some put activity there too. So this oil, I can't get over this oil. I can't get over it. This really is something, this oil. Wow. That's a niner. Oh, niner a couple of days ago. But look at its store. You see what I mean? This is not normal, right? This is not normal. This is what we were seeing in all these other sectors. It's almost like they're factoring in a major recession. Yeah, seriously. I'm serious. You're serious? Because I am. A niner, Bruce, is where you should see signs of sellers selling exhaustion. And if you don't, it's usually an indication of something bigger in the works. So you see, again, not a huge rally, but you should see some bottoming off of it. And the same time, Niners on the Reds here, you see buyers get tired. When you see this, like they just burn right through it like this, that's some real deal selling right there. Know what I mean? That's legit. And I got news for you guys. We're seeing a good amount of that. We have been seeing a good amount of that. We have been. I mean, real estate, the home builders, the casinos, some of those industrial names, commodity names, one by one, each and every sector. I remember in the summer, we were like, oh, all right, it's just the real estate sector. We still got tech, we still got this, we still got that. And then another sector would go, all right, there go the casinos. Up, there go the trannies. Up, there go the biotech. I'm telling you, a bear market tornado. That's what it is. Yeah, the weekly, I looked at the weekly today because it didn't look as bad on the weekly, right? I mean, look at this. That's 2016. I remember that too. Look at that. What are you saying? You talking about the market? Oh, you're talking about put buying, Abdul. Abdul saying, is the put buying more aggressive overall than what I've been seeing? No, honestly, no. I would say the lack of sharp activity out there, like the goods, it's turning into a longer stretch here. But Abdul, I remember 2016, being just like this, just like this. I think the put action was even worse. You know, in 2016, I keep referring to as the Bazooka Joe Lowe's. You guys hear me tell you, because what happened was, I remember it like it was yesterday, like it was yesterday. I kid you not. Okay, the markets were similar to this. All right, there was put sweeper activity. There was no call buying. There was nothing to get excited on the call sign, just like now. Okay. And what happened was oil really started to capitulate, I guess, like now. Here it is. And there was an OPEC headline. Okay. Somebody on Twitter broke OPEC news about cuts or something like that. Oil started to rally a little bit. And I remember everybody in the room, in the steam room at the time, on Twitter, all over the place, was talking about how it was fake news. That somebody on Twitter, it was a bullshit tweet. It wasn't true. Okay. And everybody was talking about fading the rally at the time. I remember it like it was yesterday. And here's what happened. As they're saying fade the rally, all of a sudden, this board here lit up with call buyers. And we call him Bazooka Joe. Somebody came in and bought, swept $1 million worth of Apple, then swept $1 million worth of Facebook, then hit the QQQs, then hit SPY, then hit an energy ETF, then came back, hit more Apple. And we were like, what the hell is going on? And mind you, everybody is bearish as hell right now. Everyone's bearish as hell. The rally starts to fade because people are talking about it being fake news. All right. I see people in the room getting short, buying puts because the market was going to new lows. We're right here. Right here. Exactly right here. Okay. And then from that point on, bro, bombs went off. Another call sweeper, another call sweeper, another name. Make a long story short, the buying never stopped. Never stopped. And lo and behold, boom. Yep, double bottom and boom. So, that's why I'm always optimistic. I'm going to come in and it's capable of changing. Same thing pre-election, similar setup. Yes, very similar setup to now. And the reason why I mentioned to you guys earlier of why I wouldn't be shocked if these lows held up is because a lot of the intermediate term sentiment, okay, a lot of the sentiment stuff that I only look at when we're in legitimate corrections, okay, they all flashed bullish into that recent low. All of them. Every single one of those intermediate term indicators that I look at that flash green, each and every bottom I've been a part of in my career, all flashed bullish extreme buy signals right into this low. So that's why it wouldn't shock me, because we're not too far off of that sentiment wise, we rallied hard and they've come out of bearish extreme. But if we hung around down here and the selling picked up, you can imagine how bearish things would get. I would find it hard for them to flush this thing much further. That's why I think this pullback here is a blessing in disguise. Because if this thing would have hung out up here and grinded higher, Santa Claus rally, blah, 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 all that bearish sentiment would have went out the window. And I'd be a lot more concerned, So that's why I come in every day now, Abdul, and I say to myself, the only thing that's really missing here is the flow. As soon as the flow turns, I'm ready, I sound like SpongeBob. I'm ready. But that's the only thing that's been missing that would really light the match here, I think, in my opinion. So we'll see. Maybe we get that, like you're saying, that double bottom or close to it, right? Maybe we get a day they sell it here and it looks like it's a foregone conclusion that we're going to at least test the lows, and that's where the buying comes in. It always comes when you least expect it. Like 2016 was off supposedly a fake tweet. People thought they had in the right information that it was a fake tweet and they can take advantage on the short side, and they got run over. So again, you got to be careful too if you're shorting, guys. You gotta be careful. You got to be quick and you got to be careful. Otherwise, you got to look for these windows here, and that's not an easy thing to do. A couple guys in the room did it. They were actually early because the bullish extreme signal came into this day right here. So the market actually pushed a little bit higher, felt a lot worse than that, and then came in. But that's where you got to be looking. And then as we get closer to bearish extreme sentiment, which we're probably only a day of weakness away, you got to be careful for that big squeeze. Anybody have any other questions? I see, and this is the true test. I don't see, nobody's asking me. Usually I get a gazillion questions on Apple, Facebook. Nobody's looking at any names. No problem. I'm doing my project. Nobody's looking at any names. Nobody's stalking any names here. Proper planning, prevent poor performance. I like that. Elliot, block orders 9 out of 10 times, especially in this type of climate, is tied to stock. It's tied to stock. So that's why. It's usually a negotiated price and it's tied to stock. Like that big block I showed you guys in THC, that player sold 40,000 shares of THC. So basically he sold 40,000 shares at $23.80. You do the math. And he replaced it with $2 million in calls. Less principal at risk, Yeah, stock replacement. So you see it a lot into earnings and in this type of environment. You see it a lot in biotech if they have an FDA date and stuff like that. I was looking at Microsoft puts, but had a really tough time at 107, thinking tomorrow might be the day. What are you looking for? Just a quick flush, Joe? For a trade? Or the big enchilada? Both. I like it. Yeah, see and again, that's why me shorting and never pan. I never really tried it enough for it to pan out, but I know how I'm wired. I can't go both ways. because like I was just, me and Abdul had a whole conversation of how this could set up for a really nice bottom, right? Now, what if I'm short right now? Like, think about my mentality if I'm short right now. Jesus Christ can come to my desk and say the market's going higher, and I still might not be convinced to cover my shorts and then get long. Maybe I'll cover my shorts, but then get long? I don't know about that. If I'm so bared up for me to not only get out of my position but flip, nah. And like I said, I told you guys, I see it time and time again. It's a shame. Some quality guys. In 2016, they were like, seriously, like 4 really solid traders. I'm talking about good traders that got wiped out off that squeeze. Totally wiped out. Totally wiped out because they made a decent amount of money shorting every little rally, the whole leg down. And even with the flow turning, even with bearish sentiment at an extreme, they didn't want to believe that that was coming to an end. Now, Elliot, I don't play the short side at all. The last time I actually had a short bet, well, actually, there might have been one time after that, was the last time I can remember was 2008, and I didn't short. I would play like the bearish ETFs. I would never short a stock, put it that way. Puts, yeah, puts, you pretty much, you lose what you put in. That's the only way I would ever play puts. But short equity, never. 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 Vince, I don't know, the Santa rally, so many people are talking about it that I almost, we have to, I think we almost have to get them to become non-believers in that Santa rally for it to happen. Vince, you bring up a good point. Abdul, you'll appreciate this. Ready? 2016 we're talking about, right? You know what everybody was calling for? A Santa rally. Guess what didn't happen? A Santa rally. And the market bottomed in February, actually. In February. And everybody and their mother was calling for a Santa rally at the time. So listen, it's possible, especially if I think we get a little more bears involved here. But at that point, that's what we're doing. We got to make them lose faith in that Santa rally for it to happen. But the more you hear about it, the less likely it's going to happen. LUV caught a little bit of action today. AAL caught a little bit of action. The airlines have been seeing some bull flow, because oil has been a menagerie. Oil's been decimated. That's why, there's some bullish things that are going to come out of this oil crash. Economically, maybe Powell will lose a little bit of his stubbornness and say, you know what, this is not really inflationary. Abby saying, how am I approaching the next couple days? Abby, what I want to see here, basically what I've been doing is trying to find a window to day trade off weakness, sometimes green. But big picture wise, what I'm kind of waiting for here is for sentiment to set up again. And like I said, we're not that far away. We'll see where things ended up at the end of the day today. I don't think there'll be too much of a difference. NASDAQ flat, yes. But we probably need a little more weakness. You got the Fed tomorrow, by the way. Powell talking tomorrow night. You got Powell speaking tomorrow night, which could be interesting. So I'll be basically in simple English, my approach, either we get sentiment set up here and we probably need a little more weakness, or, the flow, we need that drastic shift in flow. Otherwise, I'm just taking it easy here. I'm not looking to be aggressive at all. One of those two things happen. Either we need a little more weakness till we get, and then we got another setup like this here, where I'll probably look to get long something out of flow to try to be early on a squeeze. But it all comes down to the action. I just got a close eye on the action, and I want to see some real buying. I got a couple things, right? We got the Qs, we got Facebook, a couple things where we possibly seeing some early signs. But there's a lot of bulls in the air. You got Powell speaking tomorrow after the bell. You got the China trade war, Mnuchin over there meeting with them. News can come out of that neck of the woods. You got earnings left and right? Nvidia Thursday. Walmart reported yet? No, right? You got Walmart still to go. So I don't mind being patient here. I definitely don't. I mean, the most of the stuff I'm looking to grind it out, make a little money intraday. Hope that answers the question, but I'm being honest. I'm just waiting for a better setup here. Yeah, well, that's what he wants to do, right? He wants to give himself some wiggle room. Powell, that is. So next recession, he's able to cut something, but at the same time, listen, the economy as a whole, you look from the outside, is hot. This market is telling you a different story right now. This market is factoring in a recession. You could call it a growth scare, whatever you want to call it. The market, and it may not be right, but what I'm saying is the market is factoring in a recession. If you're not convinced of that now, I don't know what it would take. Right? Now, you got crude rolling over, real estate rolling over. You got some major things rolling over. Yeah, we're due, without a doubt. Without a doubt. Exactly. Long overdue. And this is where it's going to be, this is Powell's test. Yellen and Bernanke was stubborn in 2007, 2008. That's how we ended up in the debacle. He wasn't looking at things like now that we're seeing. And as a whole, there was a housing bubble and some hot spots in the market, and shit hit the fan. Yellen, was a different story. Anytime the market whined, Yellen was there for it. So this market's trying to test Powell, and we'll see. Tomorrow, off this oil pullback, we'll see if he gives. If he doesn't give, maybe that's that little flush before we can see another squeeze. It's possible. All right, guys. I missed you guys. So I see you next week again. For those of you who aren't members, again, sit tight here. Let things come to you. When there's a better setup out there, like for me, for example, just quickly, like when I'm unsure, right, I'll be like, oh, you know what, to put the calls a little elevated. Yeah, but this is not really at a bearish extreme. This is not really where I want it to be. When I have that uncertainty, when I'm grasping at straws, the best thing for me is always usually to sit tight. And then when the signals become obvious, when the setup becomes obvious, that's where you got to try to, force yourself to lean bullish and start looking around. And that's usually where it's the toughest, because again, like I said, that's probably going to be a little more weakness, a little more noise, negativity out there. And and then at least we'll have sentiment behind us that, the squeeze will be well worth it. You got enough bears reeled in. Wait until the money's laying in the corner and go pick it up. Yeah, so true. That's a great line too, Jim Rogers. That's a great line. But yeah, and I think it's important in this type of climate. Be patient, allow things to set up. Is Zitch is talking EA? Zitch, you're not. I don't think you're nuts. I mean, look at this. Again, these things got hit like everything else. Look at this. Even ATVI got whacked. So, I mean, possible market squeezes, it catches, these things can squeeze. And that's another thing too, right? We get a market squeeze and not everything really participates. I mean, some of this stuff didn't even budge. Like this ATVI number, with Zitch, that ATVI, the earnings were that bad? They were that bad? I talked to some people who were bullish coming out of that quarter on ATVI. But this market doesn't care right now. Oh, by the way, I think it was their guidance. It might have been. By the way, there's one other thing we didn't even mention today before we go. And a lot of guys I work with are telling me it's a big part of it. November 15th is that D-Day for hedge funds. And a lot of players are looking to front run that. All right. So you got the redemptions on the hedge fund end. All right. So a lot of people I'm talking to saying it's playing a big part in some of this waterfall selling you're seeing in some of the things out there. All right. So keep that in mind. November 15th is what? A couple days away here. I'll post the article. I posted it on private Twitter in the room. I'll post it again if anyone was curious in reading it. Yeah, redemption. The redemption day is November 15th, Vince, but the street knows of that already. So they're front running that. Maybe, Elliot, it could be. You understand? The street knows that redemption day is the 15th. So what are they going to do? They're going to sit and wait for hedge fund selling to come in? No. They're front running it. Maybe to buy it from them cheaper, So something to keep an eye on. And like I said, I'll post the article again in the room if you guys are curious in taking a look at it. Some cool charts on it and all from that dude on Seeking Alpha who writes up some cool shit on that stuff. All right, everybody. Be good. Like I said, take it nice and easy, relax. There is light at the end of the tunnel, trust me, because when this comes to an end, that's where you get fat in this market. All right. By the way, somebody asked the question, where did I get the name Wall Street Jesus? And a lot of you know this already, but the way it stuck was when the NASDAQ bubble blew up, as I was explaining to you guys, there was a huge bull market in small cap and micro cap stocks. And while everyone was getting blown up around me, that was my time. Those were the best years in my career. A lot of the shit I have today is from that span. And I'm a Brooklyn boy, and the Brooklyn boys used to bust my chops through the nickname Wall Street Jesus on me, and it kind of stuck from there. They kind of were, trying to mock me and abuse me in a way, but it kind of stuck from there. All right. I am Christian. I'm not really religious, but I'm Greek Christian. All right, guys. Always a pleasure. I look forward to speaking to you guys again next week. I'll see the rest of you guys who are members in the room and all. Be good, everybody.